Good morning. This is Llanes, and we are live for Market Coffee Talk. It's Friday. Happy Friday, everybody. Got a fresh brewed cup of coffee. I hope you are partaking as well. Today, we're going to be doing a review of the market. So the idea here is on a weekly basis, I'm thinking that what I want to do is to answer any questions that anybody has about the markets, about the investment market, and to focus exclusively on what we see as the most important developments over the last week that are going to be relevant for investors, and quickly communicate any kind of relevant, timely information that we see that will really affect investors. And really kind of like in less than 10 minutes, give people an interesting, unique perspective that we think that we are seeing in the market. So we want this to be something that covers the last week and then also kind of pulls back a little bit and puts things into context, and make it entertaining and interesting. So I want to show you something that I have here, something on my desk. This is an HP 12C calculator. I don't know if you've seen these before, but I got this calculator in 1987. I know I'm dating myself, but this calculator still today is one of the best financial calculators in the world. A lot of people are using different ones now. I know if you're a student, you're going to probably pick up a different one. But it's amazing how many people still use this today because it just stands the test of time and it gets things done quickly. And I want to talk a little bit about kind of the, I guess, tried and true things that are going on in the market first today. And one of the most tried and true concept in the market is the concept of momentum. So I'm going to talk a little bit about what that is. At first, I'm going to go over just the sectors, what happened in the last week, and maybe some news items. But if you look at the last week, what's interesting, I'm going to pull up this little chart here. So if you look at the last week, it's, most of the, I guess, momentum that we've been seeing has been related to energy. So the energy stocks have been doing extremely well. They're up 3.52%. And then the tech sector is up 2.1%, and communication sector is up almost 2% on the week. And consumer discretionary is up a lot too. So on a year-to-date basis, these sectors have been doing exceptionally well as well. So the energy sector is up 18%. A lot of that is driven by just the fact that we're in a recovery mode. These stocks have been under severe pressure and are bouncing. And for many investors, they seem like good values. So, and I'm going to talk a little bit more about energy here in a minute, but the tech sector is up 6.9% year to date, and communication is up 9.48% year to date, and consumer discretion is up 7.81%. So we're kind of still in this recovery mode. This morning, one of our holdings is up 9%. So we're seeing some big moves, and this is normal during the earnings season. As you go through earnings season, you have more kind of ultra moves up or down, and we're seeing that overall the earnings are coming in relatively pretty good. So it doesn't look like the earnings are falling off the cliff here. So one of the things that's really notable, we've been talking about this, is today you can see that the markets are slightly down, but if you pull back for the week and just look at what's been going on, you could see that over the last 5 days, the small caps have been leading the way as expected, and the emerging markets have been leading the way. So that is something that we've been talking about and still see doing well. Most of those in the small cap, it's really broad. It seems to be a broad thing. Both value-oriented and growth-oriented stocks are moving up. And in the mid caps, those are also outperforming the general market in the last week. They are mostly growth-oriented stocks, and I'll dive a little bit into some of the names that are going on that are driving this market. But that's one of the things that I wanted to share with you, is that momentum is not necessarily the end-all be-all, but it gives you a clue as to what's happening, and it gives you an idea about where we may be going. So I want to share a different thing with you that I think is very interesting. So there is a concept that I developed. I developed this concept called volatility adjusted momentum. And I actually wrote a paper on this. I wrote a paper on this for the Market Technicians Association. It was published in their journal. And this was, gosh, probably 25 years ago that it was published. And John Bollinger, who invented the Bollinger Band, and I had some discussions on it because there was some things that he did later on that were a little bit of an offshoot, different, but a kind of an offshoot of what I've done. But volatility adjusted momentum is a very simple idea. It's a simple idea where you're basically looking at the momentum of various instruments and then adjusting it for volatility, because you have some instruments, some investments that are very volatile and they move up and down a lot. And that, a normal move for them would be a bigger move, right? So you want to adjust those downward, and less volatile investments that have lower moves, you want to adjust those volatilities upwards because we size relative to volatility. So we want to have things on an equal footing so that we can see what's really moving. And what I'm going to do is I'm going to share my screen, and I'm going to share this concept with you in the context of the exchange traded fund markets, some of the markets that are the most, how could I say, the most liquid, the most investable. And I'm going to actually bring that up for you right now. I need to, first of all, get that up for you. And sorry about that. I'm not an expert at using this in, hold on just a second. I got to get the right thing shared. Just 1 second. Share screen. And I'm going to share my, okay, where is it? Sorry about the technical difficulties. We will get this up and running here in just a second. But while I'm pulling this up, I just want you guys to know that what I'm sharing with you right now is something that a lot of people don't really watch, because they tend to watch the, there it is, we got it up there. They tend to watch things that are a little bit more kind of on the news. And so what I'm going to show you here, or what I am showing you here, is actually a spreadsheet that we have. We link spreadsheets into real-time data and fundamental data, and we can do some calculations on it. So these are some of the most liquid ETFs, commodities, equities, sectors, and we have them classified by US equities, et cetera. And what we do is we look at and we smooth the data out. We smooth the price data out over various time frames, going from 252 trading days down to 5 trading days. And then we have a calculation where we're looking at the daily standard deviation of those investments, and we compare them and we adjust those to a volatility adjusted momentum over various time frames. And then we could actually rank them into percentiles. So we could, the strongest ones and the weakest ones. And that gives us a clue as to what, on a volatility adjusted momentum, VAM, I call it, basis, are actually giving you the best signals for continued moves. And these rankings are based on quantitative tests of momentum that tend to outperform the markets on a go-forward basis. So it's something that has been back-tested and looked at from the standpoint of validity. Of course, there's no perfect indicator, and past performance isn't always indicative of future results, for sure. But it gives you an idea about what's happening in the market right now, and you can follow the trends that are happening right now. So if you could see these green and red and orange or yellow type indicators, those tell you the ones that are doing the best are green and the worst are red. And so if you look at just the commodities, you could see that obviously the base metals and energy on a short-term basis have been doing well, but energy really has been picking up. You see this line here, energy has been picking up dramatically. And then if you come down into the emerging markets, you can see emerging markets is definitely high on the Richter scale there. Now, Richter scale. So in the sectors, though, in the sectors we see the communication services have been really on fire, on all time frames. And the gold miners have been under pressure and not really performing as expected, which surprises a lot of people. But we're starting to see technology is kind of waning, and technology is very, very broad. And so there's lots of different cross currents inside that sector. So You're not always going to see a common ground there. And you can see, and the caps, the small caps are definitely picking up. You could see the mid caps are definitely high on the Richter scale. And all of the bonds have really been not doing so well, except for um, maybe the tips have been doing okay. And recently we've seen the long-term bond pick up. And there's a lot of news really surrounding, what's happening with the Fed policy that's definitely affecting that. So when we look at that by different time frames, it's really clear. You could get the clear picture that that international stocks are now in play. It feels that way technically and even fundamentally, as these stocks tend to be undervalued relative to the U.S. The U.S. has had a big run. We also see that on a volatility adjusted basis, that real estate is also becoming much more attractive. Growth still tends to be the style that people, investors, are leaning towards, and we are definitely seeing that in the space of fixed income, it's generally not as attractive as equities. Now, if equities start selling off, you'll probably see some change there, but it's very difficult to make good real returns. I mean, we're looking at performance reports. If you're making 4% on your bond, you're doing okay, overall. So it really has not been a market that has been great for bonds. I mean, relatively speaking, it hasn't been horrible, but it definitely has not been great. So that's just kind of a quick rundown. I want to talk a little bit about in the alternative area, the Bitcoin has been on fire. I mean, it's up 50% year to date. It's up 26%, 26.72% just in the last week. So base metals and energy obviously have been doing well. Long bonds been picking up as we're going through these releases. Now, there was a few headlines that were interesting, I think, that have implications for investors. The first is that there was a Wall Street Journal article about business models are being adjusted, and perhaps even permanently, by a lot of companies. This pandemic has gotten a lot of companies realize they can do things a lot differently than they used to. So it's like, I really think that we may have a different mix in the expenses. And so what that means for investors is something that will have to be fleshed out, really in the long term, not necessarily just in the short term. So as we recover, we're going to get a lot more clarity about how that is affecting investors long term. The other thing is that, we talked about investors are piling into Bitcoin. That's something we've really already touched on. And the U.S. debt, the CBOE came out and they said, hey, listen, we're on a track right now for a massive debt problem in the United States. So that's something that we definitely need. That's definitely a headwind that we are going to be continually need to discover how that affects investors. The other thing is that, one of the things that I want to talk about at a high level is individual investors are getting very, very active right now. There's a boom in individual trader activity. And typically when that happens, the market tends to be closer to a top than to a bottom. So that is one of the sentiment indicators that I look at, and that is definitely flashing a caution signal right now. We could just look at the GameStop as an example. This is not totally new to people like to think these are new concepts, but short squeezes are not new. Individual investor speculation is not new. One thing that is new is that commissions are now zero, but they're really not zero. People don't see the commissions. There's order flow being sold in the marketplace that is creating perhaps worse fills, which have a cost associated with them. You just don't see them. So I think investors are going to be learning some things soon here, individual investors who are trading on their own. So we're likely to see a lot more immigration into the system. That's one thing that I think will affect individual investors from a few standpoints. Some would be, what is its effect on the healthcare system? What is its effect on social programs? And what is its effects on the politics and how we will be driving policy? Will these new immigrants be able to vote soon, and what time frame? And if they will be able to, how will that affect the overall voting patterns? We think we have an idea about what that will do, but that could be something that would really affect policy over the longer term in the United States. So the other thing is I wanted to talk about is how much, this is something that's very interesting. Healthcare stocks are starting to go up, and some of them look very attractive. But there's this real problem that we have as we've had more. I don't want to say socialized medicine, but it's becoming more that way, and may perhaps become more that way. What does that mean? I mean, there was a great article in the Wall Street Journal about how much a C-section costs. You know, a C-section, does it cost $6,200 or does it cost $60,000? Well, it depends on who's paying for it, right? And that has a lot to do with policy and economics. And we really have to think hard about how we go about our healthcare system, especially as our population is aging. We've seen a little bit of a little bit more changes in how Iran is dealing with their uranium. Iran has been breaking some rules with regard to uranium and nuclear. You know, we had a nuclear deal. They're breaking some rules again. I guess maybe they feel more emboldened under the new administration. I don't really know, but I guess there's some. You know, it's interesting. We'll see what happens there. There'll be some developments in the Middle East that are probably different than what we saw in the last administration, and that could affect energy and things like that. And my focus again is on, well, how is this affecting investors? Biden made a comment this last week that that quote unquote China will eat our lunch if we don't step up, right? Now, this is not a news flash for those of us who have been following the markets, right? We know that China will eat our lunch if we don't step up to the plate. And there's a lot of issues with regard to unfair practices and things like that. So we'll see how this new administration deals with China. But at this point, I think it's more bullish for China, as they will be able to increase their profits under the new administration relative to the U.S. Another thing is the rejoining of the Paris Accord. You know, the Paris Accord is mostly a symbolic, and most analysts who really follow this, there's a lot of rhetoric around the Paris Accord, but it's mostly a symbolic thing. There's no quick fix with the Paris Accord. It's going to take a ton of energy. And actually, we've made a lot of progress relative to other countries, and other countries are really not making much of a move at all on the needle. But I think this is going to continue to spur investors to flow capital into alternative energy and electric car related investments. So I think that could really affect investors in the near term. So there's a lot of stocks that I like to follow a list of companies that are near highs, that have strong revenue growth, say 20% or more revenue growth in the last quarter, and they're in an uptrend and they're profitable. And one of the things that we've been finding is that there's only like 82 companies right now that are meeting this criteria. It's come back a little bit, but it's still relatively strong from that perspective on a technical basis. We're seeing stocks that are generating profits, like even in copper. You know, for example, Southern Copper, SCCO would be one stock. There's definitely a lot of activity going on in the gaming and in the internet space. And there's tons of names that we can talk about there. We still see a lot of growth happening with home building and investments related to financing homes with home improvements like Lowe's, which is one of the companies that we own, D.R. Horton. Another thing that we're really seeing is that, in the consumer cyclical area, anything related to, I shouldn't say anything, but a lot of investments related to electric cars could have a big rally, continued rally. Clearance would be one of those stocks, CRNC. That's something that's happening. And we've even seen companies like Boston Beer breaking in the new highs, a little bit more of a defensive play, but kind of a trendy beer play. In the financial area, mostly what we're seeing there is some of the asset management firms and the exchanges, because the trading activity has increased. And then we're also seeing on the value bucket, there's more value being created in some of the small caps as well. As far as fast growth companies, there's little biotech companies that are doing well. There are companies in the semiconductor gaming. NVIDIA continues to be one of the stocks on the list, Skyworks Solutions. So I think we're in kind of this niche market. And if you are looking underneath the hood, there are great opportunities to be investing in. But there's definitely, from our perspective, some caution involved in the market, because whenever you get into this frothy type of a market, then air pockets tend to be something that come and sideline people. So I think that's about all I wanted to cover. I went for 20 minutes so far, so I went way over what I'm trying to achieve, but I wanted to cover a lot today just to get start the ball rolling, and had a little bit of technical difficulties. But I hope you guys are doing well today. If you have any questions, let me know. Just comment, and they'll come up, and I can actually show them on the screen. Ask any questions that you have. And if you want to ever have any kind of second opinion, also feel free to go to our website. I'll put it in here. And if you go there, there's a little there's buttons on the top say request a meeting, and you can basically have a 15-minute conversation with me or one of us to talk about your situation. But again, we're in a good market still. Just time to be cautious. I hope you're having a great day, and we will talk to you later. Have a great weekend.